Another problem on closing stock of finished goods. So from the following particulars, we need to find out the prime cost, works cost, cost of production, cost of sales, and profit per unit. So this is the particulars relating to the production and sales for the year ended 31st March 2021. We have opening stock of raw material, work in progress, finished goods. Finished goods units is mentioned. There is closing inventory of a raw material, work in progress, and finished goods. Okay, but finished goods amount is not mentioned. So this one we need to find out. We have raw material purchased, we have productive wages, machine hours worked, machine hour rate. So machine hour work multiplied by machine hour rate is our factory overhead. We have chargeable expenses, which is a direct expense. We have selling overhead rupee zero point 0.9 per unit. That means we need selling units to uh, get the selling overhead. Unit sold is mentioned. Oh, no tension. Unit sold is already mentioned. Unit produced is also mentioned. So what we don't have is the closing unit. Finished goods opening is there, but finished goods closing is not there. So every detail is there. Opening stock is mentioned. Purchased units are mentioned. Units to be sold are mentioned, but units to be produced, this one, yeah, this one, closing units is not mentioned. So every other variable is mentioned. We can find out the closing stock of finished goods. We have office and administrative overhead, which we will multiply with the units produced, and we have profit on sale of 10%. So whatever is the sale amount, the profit will be 10% of sales. That is 90% of cost. Okay, let's start doing the problem for clarity upon the question. So cost sheet, the year ended 31st, this is March 2021. Particulars and to amount columns. So first we need to find out raw material consumed. So opening stock of raw material plus this one,
6,000
purchase.
plus 72,000.
Raw material purchase less closing
72,000.
stock. Yes.
And
Compute.
closing
Okay, Bhavya, compute in your own. I know you have understood the concept. It is good that you have understood, but answer only when I'm asking the answers to it, because others will, who are not able to compute so easily, they will face the difficulty. You're computing, that's good. Find out the answer and tally with me if you're getting the answer. So opening stock of raw material 6,000, and you, we generally add opening stock, add purchase less closing stock. So add this one, raw material purchase, which is 72,000, is of raw material 72,000. So how much you're getting? 78,000 less closing stock of raw material. Closing stock of raw material is how much? 7,000. So raw material consumed is
I'm
71,000.
71,000.
Now, along with this, we will be adding all the direct expenses. So what are the direct expenses? Opening stock, closing stock, raw material purchase, productive wages is there. And we have chargeable expenses. Productive wages is how much? 18,000. which is direct wages, and chargeable expenses is your direct expenses, which is 16,400. So to find out prime cost, we know we will be adding all the direct costs. So we have added the raw material consumed, we'll be adding productive wages, which is 18,000. Add chargeable expenses, $16,400. So what you get is prime cost. $71,000 plus 18,000 plus 16,400. So 1,05,400. Our prime cost. Bhavya, is that 1,05,400?
Yes, ma'am.
So now let's add the overhead. It is machine hours worked multiplied by machine hour rate. So machine hour worked is 21,600 multiplied by
1.5
rupees
is given.
1.5. So we multiply 21,600 multiplied by 1.5, which is
32,400.
32,400. So if we add 32,400 with 1,05,400, we get 1,37,800.
Ma'am,
Yes.
ma'am, this factory overhead calculation I'm facing a bit problem. Ma'am, why we are doing with machine hours?
Machine hours. Where do you operate machines?
Ma'am, in industries and factory only.
Factory only we operate machines. So how many hours machine worked multiplied by, like, if the machine hour work for 5 hours, then per hour what is the rate of operating a machine? So per hour, if it's rupee 1, then the industry incurred a cost of 5 into 1, that is rupees 5. Understood?
Yes, ma'am.
So similarly, if machine hour worked for the whole year is 21,600 hours, that, and per hour rate is 1.5, that means the machine worked for 21,600 multiplied by 1.5, right? So that is the factory expense.
Yes, ma'am,
So
it's clear.
yes, so since no other expense is mentioned of factory, only this one we are adding about machines.
Ma'am, there is mentioned work in
What?
progress. We will be
Work
adding.
in progress. That is
Yes.
different. That we will be adding, but factory overhead, that miscellaneous other expenses of factory,
Okay.
that is not mentioned.
Yeah, ma'am. Got it.
Yes. So factory overhead we have found out, and will, along with this, we will be adding opening work in progress and will be deducting closing work in progress. Add opening work in progress, which is 9620, and closing work in progress is 8020.
Ma'am, 1,39,400.
Wait. If you have found out, I will be computing. Check the answer with whatever I have computed. So opening is 9620 and this is 8020. So 9620 minus 8020 is more 1600. So you're adding 1600 to this. If you add this, what you're getting, 1,37,800.
Ma'am, 1,39,400.
Yes, ma'am. 1,39,400.
1,39,400. So that is our works cost.
Yes, ma'am.
So that is works cost. So prime cost is 1,05,000. That is answer to number 1. As per the question, it has been marked. Number 2 has been marked as Alai. And works cost is 1,39,400. So after works cost, we have office.
Office and
Ma'am,
administration.
number 2 will be which one?
Works cost.
Okay, ma'am.
So mark it number 2. Next is office and administrative overhead. After office comes selling. So office and administrative rupee 1 per unit. So still, this is an expense you are bearing to create the product, which is rupee
Yes.
1 per unit. And unit produced is 8,200. So therefore,
8,000.
200
It will be 8,200 only.
1. So that will be 8,200. So if you add this, you're getting cost of production. So that is 1,47,600.
1,47,600.
Did the question ask about cost of production? Yes. Cost of production, then cost of sales. So along with this, we will be adding stock of finished goods and deducting closing stock of finished goods.
Ma'am, cost of production will be number 3.
Number 3 is there in the question. Now we will be adding opening stock of finished goods. So opening stock of finished goods has been mentioned in the problem, which is 13,680, whose units is 1,000. Now here we need workings. 13,680.
Ma'am, will you repeat this calculation and how this amount is coming?
13,680 is there in the question. Opening stock of raw material over here,
Yes, ma'am.
13,680. But we don't have this one, finished goods. But what we had opening stock of finished goods, which is 1,000. Add purchase, so unit produced is 8,200. So 1,000 plus 8,200, 9,200 minus the amount of units actually sold, which is 800, 8,000. So 1,200 is the closing stock of finished goods.
Yes.
1,200 units is the closing stock of finished goods.
Ma'am, I guess we did one mistake. We didn't calculate the unit amount. So how we will be getting the amount for the...
We will calculate. Don't worry. We will calculate. So this closing stock of finished goods. Wait, we need to do the workings. So create the workings column. Just a second. What will be the finished goods per unit? I'm also calculating. You also calculate.
Ma'am, it will be 18 rupees, right?
Yes.
Cost of production divided by 8,200.
Cost of production divided by 8,200. Absolutely.
18 rupees into 200 we will be doing then.
Yes. 1,200. So first of all, over here, determination of in stock of finished goods. At purchase finished goods 9,200. 9,200. Yes. Finished goods 1,200. Finished cost per unit equals to cost of production by units produced. So what is the cost of production? 1,47,600 divided by units produced is
8200.
8,200.
So 18 rupees per unit.
Yes. So therefore, rupees 18 per unit. So this is workings number
1.
workings number 2. So closing stock of finished goods W1, W2, that is 1,200 units multiplied by rupees 18.
Ma'am, I have one doubt over here.
Yes.
Ma'am, why can't we take 1,000 into means we have the amount for 1,000 units, that is 1300 then we will into 200 into 18, so that in that case the profit will be much higher.
But you have brought in certain you have brought in certain materials, you have sold some material. So closing stock of finished goods is that unsold stock.
I didn't get you, ma'am.
Uh, Suppose you are having 100 rupees of t-shirts with you. You are manufacturing t-shirts and you have 100 units of t-shirts. Now during the course, you again purchased around 500 t-shirts. So right now, how much t-shirts you have?
600.
Right. Now out of the 600, you could only sell 550 t-shirts.
Yes, ma'am.
What is the amount of t-shirt left with you?
50.
50 units. So this 50 units you're carrying forward to the next year, next financial year. So at the end, whatever is left out with you, this 50 units, this is your closing stock of t-shirts.
Yes, ma'am.
So this 50 units is your closing stock of finished goods for you, for your business. So next year when you're transferring it, it is becoming opening stock of finished goods, 50 units.
Okay, ma'am. Got it.
Yes, so that's why we cannot multiply 1,000 over here because there are calculations within it. Purchase has been purchase and sale of goods has occurred. That's why. That's why it's 12.
Ma'am, but in the last term which we did, in that we did in the same way.
No, 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 that you're telling, but generally we record in this way, first in, first out. So you're talking about simple average. Simple average, we have done simple average. That is a different thing. That we have considered whatever purchase and sale has happened, finally whatever is the result is coming. So purchase and sale has, suppose you have purchased 250 units for rupees 5 and another 250 for rupees 6. So if 50 units is your final closing stock, then what should be the price of this 50 units? Then you're doing an average of rupees 5 and rupees 6. You will learn this in the next chapter, which is material costing, where you will learn LIFO, FIFO, and simple average. So finally, you will be having certain closing stock, but at what rate you will be, calculating the final figure is depends upon whether you're using FIFO, LIFO, or simple average. And in the question, nowhere it's mentioned that at what rate the units has been purchased.
Okay, ma'am. Got it.
Okay, that is why we will be simply going for this method.
Okay, ma'am.
So 1200 multiplied by 18,
21600.
21600. That is a negative figure. 13680. That means they have not sold, rather they have more. It is clearly seen 1000 was their opening stock, now it's 1200. So 7920 is the negative figure we have.
Answer will be
Ma'am,
139.
7920.
Yes, so answer will be
139680.
139680. This is cost of goods sold. This has been not asked in the question. What has been asked is total cost. Now we will be adding the selling and distribution overhead, which is rupee zero point 0.9 per unit. So selling overhead, now how much units have we sold? We charge selling overhead, selling expenses to the units we have sold. So how much units we have sold? 8000 as per the
Yes.
question.
8000 into 0.9.
Absolutely.
Yes, ma'am.
72.
7200.
7200. So what is the answer?
146880.
Yes, 146880. So you got answers till cost of sales or total cost. Now you need to add profit,
Profit.
which
That
is at
is
the rate of 10%.
10%. 14688.
No, 10% of what? 10%
10%
of
cost of sales.
sales. Profit on sale. So 10% is on sale. So that means 10% of sales means sale is equals to, sorry, just a second, is equals to 100. Profit is equals to 10. We know that cost plus profit equals to sales. So we therefore can say that cost sales minus profit. Can we say this? Can we say
Yes,
this?
ma'am.
Left hand side to right hand side. Cost is equals to sales minus profit. Therefore, cost is equals to 100 minus 10, which is equals to 90. Can we say this? Can we say this?
Yes, ma'am.
Profit on sell is equals to your 10%. Then profit on cost we can say is, so we can say this amount, that is your cost, which is 1,46,880. So this 90% is equals to with respect to 1,46,880. So if we need to find out profit which is 10%, so profit on cost we can say is 1,46,880
Ma'am,
divided by 90 multiplied by 10. Yes,
ma'am, this part I didn't understand, ma'am. How this 90 will be equal to 1,46,880?
we found out now. What have we found out?
Ma'am, cost of sales total cost is 1,46,880.
That we have found out. We know that sales is 100%. Then
Yes, ma'am.
because profit is 10%. So if profit is 10% and sale is 100%, then therefore cost is 90%.
Yes, ma'am.
So therefore we can say that 1,46,880 is with respect to 90%, the total
Yes,
sales.
ma'am.
So to find out total sales, we can say this 1,46,880 if is with respect to 90, then for 1 rupee, the amount will be 1,46,880 divided by 90. And for 100, that is your sales figure. For 100, it is 1,46,880 into 100 divided by 90. We can say this
Yes, ma'am.
unitary method. So therefore, total sales is how much? Total sales is 1,46,880 multiplied by 100 divided by 90. So
Ma'am,
therefore,
1,63,200.
yes, 1,46,880 into 100 divided by 90 is 1,63,200. So therefore 1,63,200 minus 1,46,880, you will be able to find out profit, or you can find out profit as simply into 10%. So if sales is 1,63,200, so 1,63,200 multiplied by 10%, which is 1,63,200. Understood?
Ma'am, we can follow any one of the method. We can deduct with 1,46 as
Ma'am,
well,
can
or
you
equal
show
to
the question?
10% as well.
Yes. Yes, you can do both. Yes, Bhavya?
Ma'am, can you please show the question, ma'am?
Yes. Haven't you taken the screenshot? Everybody should take a screenshot whenever I'm showing the question. That will make things easier.
Yes, ma'am. Okay, ma'am.
So this is our profit. Now the question is there, what is profit per unit? So now tell me what will be the profit per unit. Therefore, profit per unit is equals to how much? 16,320 divided by how much units? Profit, in what unit you will be earning profit? The amount you are selling. The amount you're selling, you will be getting profit, isn't it? The amount which you have not sold,
Yes, ma'am.
you will not get profit in it. So the amount which has been sold is 8,000 units.
Yes, ma'am. We will divide it just. It will be 2 point something.
So 1 lakh
Yes, ma'am.
63
20.4.
divided by 8,000. Practice more, concepts will be
Ma'am, it's
more clearer. So
2.04.
2.04. So this is our answer. Every point is our answer. So this is answer number 4. So profit per unit is rupees 2.04.
Ma'am,
Yes.
ma'am, I have one question, ma'am. The books which you suggested the previously, ma'am, will you suggest it again, ma'am, for cost accounting?
Cost accounting. Go check your Amazon syllabus. It's their series of books are there. Wait, I'm opening the syllabus. Open your syllabus and at the end it is mentioned this one. SP Jain and Narang. Jain and Narang books. Theory and Problems. Maheshwari and Mittal. Jain and Narang. Principles and Methods. Cost Accounting Principles and Method. Shukra Gerewal Gupta. Cost Accounting Text and Problems.
And we can buy any one of this.
Anyone, yes, which has a number of problems in it. Buy that.
Okay, ma'am.
Check the syllabus, tally with the syllabus. Most of them will tally with your syllabus and buy. So yes, that was one problem. So time is also up. So this is the second type of problem we will be doing. Wait, I'm sharing the second problem. So this is a problem related to identification of cost. This is a problem related to identification of cost. So as you can see, the problem, the following particulars are available from the records of a factory for the year ended 31st December 2021. So here the stock of opening, the opening stock and the closing stock is mentioned, purchase is mentioned, and freight and insurance, purchase return. So as you can see, there are varied amount of stock informations, items has been mentioned. So computation, the pattern will be same. Raw material consumed, then prime cost, then works cost. After works cost, we'll be finding out cost of production, then cost of goods sold, or cost of production can be cost of goods sold. If finish goods information is missing, then we will add selling and distribution. We will be getting cost of sales or total cost, and we will add or subtract the profit or loss, and then we will get the total sales. So here the you have to understand that which cost will go where. What is the factory overhead cost? What is the office overhead cost? What is the
Ma'am, will you
direct
scroll a bit
expense?
down?
Yes, that you need to understand. So just discuss these problems once. So stock of material, opening stock, closing stock, purchase is mentioned. So opening stock plus purchase less closing stock, you're getting raw material consumed. Now with raw material consumed, you have freight and insurance on raw material. Now again you have purchase return, right? So opening stock at purchase, you'll be before adding closing stock also you could do one thing. You can add opening stock, add purchase, add freight and carriage on raw material, and then you can deduct the purchase return along with closing stock, and then what else we have? Loading and unloading charges. So loading and unloading means, loading means in a truck you're loading the materials and you are unloading the materials, that is you are unloading this trucks, you're unloading the raw material from the trucks. So this is also one transportation kind of an expense in relation to raw material, which is direct
That
in
is
nature.
direct expense.
Yes. So opening stock of raw materials plus purchase of raw materials, add freight and insurance on raw material, add loading and unloading charges, less closing stock on raw material, less purchase, you will be actually getting raw material consumed. After doing that, you will be searching for two other type of exchange expenses. One is wages, another is direct expense. So we will see if we have any productive wages or direct wages. We have direct expenses, but we are
Manufacturing
searching for
expense.
manufacturing wages is there. Manufacturing wages is your direct wages.
Yeah, so
So
that also will be getting added to the prime cost.
yes, absolutely. Raw material consumed, add manufacturing wages, add direct expenses, you will be getting prime cost unless and until we have any other direct expenses. So check once if you have any further direct expense or not. So if you do not have any other direct expenses, so add what you will be getting is prime cost. Now along with prime cost, we'll be adding all the factory overhead related, factory expense related cost. So put a heading factory overhead. Then you see fuel and power. Fuel and power is required for running the factory. So
Yes,
yes,
ma'am.
this is factory overhead. Repairs to factory machinery. It is clearly written. So you just add unproductive wages. Productive wages is manufacturing wages or direct wages. Unproductive wages is factory overhead, indirect wages. That is, now, unproductive wages means it is not directly related with production. So unproductive wages will be added over here.
Yes.
Along with that, audit fee is there. Audit fee. Now, audit fee is a office work. So you
So
will,
it come and after cost of production it will come, ma'am. It's not will come in work cost.
yes, it will not come in works cost. So in office and administrative overhead, you will put a heading after works cost. This is cost of production, where you will be adding office overhead. No, you will be making a heading office and administrative overhead, where you will be adding audit fee. Because after you add works cost with office and administrative overhead, you get cost of production.
Yes,
So
ma'am.
audit fee, bank charges. Bank charges is also office related
Yes.
expense. Salaries to office staff, office related expense. Haulage of machinery. This is a factory overhead expense.
Now, what is haulage of machinery?
Haulage, any issue, any problem with the machinery. Repairing of machinery due to any fault.
Okay.
So basically, it's a repair of machinery, you can say. So next is loose tools written off. Loose tools written off is again factory related expense. Preliminary expenses written off. Preliminary, what are preliminary expenses? Preliminary expenses are those expenses which are incurred before incorporation of the company, right? So preliminary expenses will be going in notes, right? It will not come in cost sheet. It will go in notes. Um,
What
Next,
is no? We have not discussed
which one? Preliminary expenses.
that. Yeah.
Preliminary expenses
Notes.
are those expenses which are incurred
No, ma'am. You
before.
do notes now. That's how we will
Oh,
miss
we
that.
will mention preliminary expenses are those expenses which are incurred um, before incorporation of the company. Thus, it will not come in cost sheet. Okay.
Okay.
Cost of water and gas supply. This is a factory related expense. You need water supply and gas supply for manufacturing the good. So cost of water and gas supply will come in factory overhead. Managing directors remuneration. Managing directors remuneration will be office and administrative expense. So it's a salary. Expense of counting house. Expenses of counting house is again office job. So this will come in office and administrative. Employees contribution to ASI scheme. Again, this will come in office and administrative overhead. Cost of printing price list and catalogs. Cost of printing price list. This is you know, printing charges and advertisement related things. So selling and distribution. You will show this catalog to the suppliers. So yes, this is a selling and distribution. Marketing manager's salary, selling and administrative. Administrative campaign salary, selling. Salary of works director, works means production director, will go to factory overhead. Right. Normal idle time wages. With this will go to factory overhead, normal idle time wages. Income tax. Income tax doesn't come in cost sheet. Income tax will is a financial cost. So this will go in the notes. And insurance of warehouse. Insurance of warehouse, you are keeping the goods after you have produced it. So this is the cost.
Office.
No, this will be selling and distribution. You know, you're keeping distribution expense, basically it is. This is a
Okay.
distribution expense. So you're keeping in warehouse. Then expenses on staff cars. Okay, expenses on staff cars. This is a office related expense. You're bearing. This is an additional facility you're giving to your employee. So this is a office related expense. Then the branch office expenses. Branch office expenses is a selling and distribution expense. So you have manufactured the goods, you have done all the administrative work. Now your goods is in the hands of other branch, which is maybe in another location maybe. So you're distributing it. So this is a distribution cost. And loss on sale of finished goods, fixed assets. Loss on sale of fixed asset, this is again a financial cost which doesn't comes in cost sheet. So this will come in the notes section. So you will just add
So
this up and
why are you, why are we taking that loose tools written off in the cost sheet?
loose tools written off is directly related with production related expense. That's why loose tools written off. It's not mentioned loose tools. It's mentioning loose tools written off. So loose tools is basically is not an asset of the company. It's just like a machinery. Loose tools the company keeps with itself. When the loose tools are created into a machinery, then the machinery becomes an asset. This is not an asset. Loose tool is not an asset. Okay. So that's it for today. We will solve the sum in the next class. Thank you, everybody.
Thank you, ma'am.
Thank you,
Thank you,
ma'am.
ma'am.